Okay, welcome MegaWhale team to another video. Today is our third video of the series Let's Learn to Trade. We're going to be taking you through the RSI today. So what is the RSI? So the RSI, also known as the Relative Strength Index, is a popular indicator used in technical analysis tools, and it falls under the oscillating category. So the RSI is primarily used to help traders identify momentum, to help us identify when an asset is either overbought or oversold, and it also helps us identify possible divergences and hidden divergences between the financial markets and the price. So what is the RSI, and basically how is it calculated? So essentially the RSI is a calculation of the profitable price closes relative to the unprofitable price closes reflected as a percentage. And that percentage is based between 0 and 100. And if we take a look at our RSI here, we can see our range between 0% and 100%. So first and foremost, the RSI is a momentum indicator. So momentum indicators are technical tools that basically measure the speed and velocity of market price movements. And we can use that data to gauge short-term trends, as well as give us indications of sustainability of these trends and health of these trends. So if we see the momentum increase and the price increase rapidly, we generally enter these periods or these areas of overbought. So we enter this area over here, we got overbought, all over here is overbought signals. All right, anytime we're above the 70 on the RSI, to 70%, we're technically overbought. The sell signal would be when we drop back below the 70. All right, so it's very important to remember and to keep in mind, just because an asset is overbought or is showing as overbought on the RSI, it does not mean it's time to sell. All right, so keep that in mind. It's a very, very critical piece of information. If we take a look at Bitcoin chart, we were overbought according to this chart on the 17th of December. If you sold on the 17th of December, you would have sold at $19,000. When we actually had the true signal to sell, which was when we broke back below the 70, was on the 12th of January, this point here. So you missed out on that entire move because you didn't use the RSI correctly. All right, and we can use that in many other cases. Again, this is a one-day chart, so we're seeing quite a expanded view of the RSI. It's smoothed out over a larger period of time, but you can use the RSI on any time frame. And if you go down to the shorter time frames, you will notice that the RSI jumps between overbought and oversold a lot more than you will see on the daily chart or a weekly chart. That being said, the same rules apply. So how do you know when an asset is oversold? So we're going to take a look at the RSI again, and you will notice every time the price drops below 30%, we are oversold. It doesn't happen often on the daily chart, but again, you move to the smaller time frames and you will see it. All right. And again, when is our entry point? Our entry point will be when the RSI crosses back above 30. All right. So just because it's under 30 and it's oversold doesn't mean it's a good time to enter. All right. We need a reversal. All right. Just as an asset can remain overbought for an extended period of time, an asset can remain oversold for an extended period of time. So let's get into it. How do we use the RSI to trade? How do we use it to predict market movements, more importantly, which is what I use it for mainly? We use something called divergences. Now, to put simply, a divergence signal within the RSI is considered when the price of the market, so the market price and the RSI, are moving in opposite directions. So we can see we have a general downtrend here. And if we take a look at the RSI, we saw we had an uptrend. So when the price is moving down, but the RSI is moving up, that's depictive of a bullish divergence. Now, bullish divergence signifies a possible trend reversal and a great entry. As we saw, the price increased from about $30,000 up to about $52,000 in that period before coming back down. More recently, we saw a bearish divergence. So opposite, a bearish divergence is when the price is increasing, but we notice a decreasing movement on the RSI. Now this signifies a potential trend reversal in the opposite direction, a trend reversal downwards. Alright, there's one more thing I want to briefly touch on, which is using the RSI to identify areas of support and resistance. We can see that on the RSI, we can actually draw a descending line from the pinnacle of the RSI on the 8th of January, all the way and extending down. And we noticed we found resistance on this line, on this area of resistance, for nearly 7 months. And that was from the 9th of January to 8th of January, all the way until the break point being the 21st of July, sending our trend upwards. So we can notice a similar thing actually playing out right now, which is we can take that bearish divergence and extend it forward to indicate a period or area of resistance. All right, we do expect a retest downwards into oversold territory, but once we do break this line, we expect the trend to reverse and the price to increase, similar to what we saw from the 21st of January up until the 20th of October. We can also use the RSI to identify horizontal support areas, or support zones, support lines, whatever you want to call it. All right, we can show that on the RSI on the daily, that the period of 42.67% has acted as a long-term support. Every time we've broken that area, we've had a surge in price, and every time we break below that area, we have a rapid decrease. All right, we've seen that happen many times. I'm not going to label them all out, but to take one for example, over here, the 19th of September, we broke below that 42.67 on the RSI on the daily, and we crashed down. All right, we'll find one more over here, 20th of April, we broke below the 42.67 and we crashed down. So the RSI can be used not only to understand market direction and obviously act as a momentum indicator and do all the things we talked about previously in the video, but it can also be used to identify long-standing support and resistance lines, which you cannot actually find on the price action, or which is not shown on the price action. So what I like to do when analyzing a chart, particularly when I look at entries for long-term signals or exit points potentially going into a downtrend, I love to look at the RSI, and I love to chart out the RSI similar to how I would chart out an actual price chart, which is drawing in these trend lines, drawing in these horizontal supports. And this can provide you a whole new level of information which you just possibly cannot derive from a chart. And it can take your trading level to a whole new level. And the whole reason I was able to predict this entire drop weeks before it happened was using the RSI. Using it on a 3-day chart, I used it as a vertical analysis indicator between the RSI, the price, and the MACD. Alright, so the RSI has a multitude of different possibilities and uses, and I hope today's video has helped you understand some of them. And if you already knew some of them, I hope it helped you further your understanding of how to use the RSI in different scenarios and how to use your bullish and bearish divergences, and open your mind to the new possibilities of using it for indicating long-term horizontal supports as well as long-term resistances, which you cannot find on a standard market price chart. Anyway guys, thanks for watching. I will see you all in the next video. Remember, like, comment, and subscribe.